guys, it's Stock Curry. Today we're going to talk about AMC, we're going to talk about the FANG stocks, we've got a dozen different stock picks for you guys, I've also got a market update, and we're going to talk about why YouTube is deleting the channels of your favorite YouTubers. So let's get into it. Now, before we get started, I just wanted to let you know that I am going on vacation this weekend, so there will be no videos Monday or Tuesday. So just a reminder, don't look forward to any videos Monday or Tuesday. I will not be putting any up, but I will be back with you guys on Wednesday of next week. So I'll have videos for the remainder of this week and then no videos until Wednesday of next week. Okay, the first thing we need to talk about today is why YouTube is deleting the channels of your favorite YouTubers, or at the very least, why they are threatening to delete those channels. Now, actually, we don't really know why this is happening, but we have some theories. And the thought is it has to do with these scammers. You guys have all seen them. You post a comment on one of my videos or a video of another YouTuber, and almost immediately you'll get a reply, and it's somebody that claims to be the YouTuber that you have commented on, and it has something about contact my broker or contact my advisor, and it'll typically have a WhatsApp phone number or a Telegram phone number, and it's just a complete and total scam. Basically, they're trying to get you to send them your crypto, and then you'll never hear from them again. Unfortunately, YouTube, in their attempt to crack down on these scammers, has actually targeted some official pages. One of those being Graham Stephen and another one being Stock Mo. They are threatening to take down their channels on July 12th. Now, there's a couple of things that I am going to be doing to prevent my channel from being taken down. So first of all comments are going to be held for review from now on. Now, that's a good thing because it means there will be no more scammers on this channel. However, it is a bad thing because it means your comment is going to take a while to show up. In fact, you may not see your comment for 8 to 10 hours after you post it if I happen to be sleeping. Unfortunately, I now have to go in and manually approve every single comment on this channel. There's just no way around it. It's the only way to stop scammers and hopefully prevent YouTube from taking down my channel. Now, you can help by asking the CEO of YouTube to stop taking down the channels of your favorite YouTubers. Make sure you include a link to the channel that you're talking about and just send her a tweet at the @ symbol and just ask her to don't take down the channel of your favorite YouTuber and instead to please do something about the scammers. Okay, let's get into the market update. Now, as we saw today, pretty much all the stocks were down today. There were a couple of stocks that were up, mainly the large high-tech stocks, those being the FANG stocks, Facebook, Amazon, Apple, Netflix, and Google. Those were all up today, but pretty much everything else in the market was down. FANG stocks are now overvalued, and most YouTubers think that those will in fact come down. But there was one thing that was up overall in the market today, and that was cryptocurrencies. Cryptocurrencies are a store of value, like gold. And as inflation goes up and as the value of the dollar decreases, more and more money will start going into cryptocurrencies. You have to remember that this year, inflation is expected to be 5%, which means you need to make a 5% return on your investments just to break even. If you stake your crypto, say you stake USD over in Coinbase at 4%, you might think, wow, 4%, that's such a great return. But you don't realize that you're actually losing money by staking crypto at 4%. The reason is because if inflation goes up 5% and you only make 4%, you actually lose 1% on your money. So this year, you need to make 5% in your investments just to break even. If you want to see a 10% gain this year, you need to make a 15% gain on your investments. And crypto is expected to far exceed those returns, which is why crypto might very well be the best place to invest your money this year. Okay, all of that said, let's get into today's stock picks. Now, for those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stock picks from the top 10 YouTubers. Every day, I give you the cliff notes for every single stock pick from the top 10 YouTubers, as well as my analysis on their stock picks, and I combine it all into one concise video to save you a ton of time. Now, if anything I talk about today piques your interest, make sure you listen to who I say talked about that stock and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you is that you hit that like button, subscribe, and click the bell icon, and then click all so that you can get notified of my next video. In fact, I'll give you 5 seconds to do that right now. Alright, before we get to today's stock picks, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I analyze are financial advisors either. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions which may or may not be accurate. Please do your own research before investing in any asset. For those of you who are wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $2,300, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $5, Webull is going to send you 2 free stocks worth up to $2,300. Alright, let's get into today's stock picks. First up is AMC, and this is AMC Movie Theaters. Chris Zane likes AMC under $50. Technically, AMC is very bearish right now, but I've seen it happen many times before where AMC just does not do what the technicals say it will do. So I would be very careful about playing the technicals and opening a bearish position on AMC. As I said yesterday, we could see quite a bit of buying pressure starting on Thursday and going through the next 2 weeks due to the failures to deliver security threshold rule. And another upward catalyst for AMC could be the fact that AMC just decided to drop its July vote to add more shares. AMC also made the decision not to bring the issue up for vote again this year. What that means is that there will not be any more share offerings on AMC this year since AMC is out of shares. That is great news for all shareholders because it means the value of your shares will not be diluted. If you want to know more about this news, Keenan Grace did a great job covering the news articles surrounding this announcement in his video that he uploaded Tuesday. Next up is AMZN. This is Amazon. Chris Zane showed us how AMZN has been range-bound for an entire year since July of 2020, and it finally broke out today. When it broke out, it continued to run all day, finally closing up over 4% on the day. It might rise again tomorrow a little, but be careful because it is now also overbought on the RSI. Earnings are coming up at the end of this month, so Amazon might continue to rise going into earnings and then sell off after earnings. We'll have to wait and see, but this is definitely big news that AMZN broke out above this year-long range that it has been trading in. Chris Zane said this is an example of why you need to be patient with your long-term holds because you will have periods where your stocks trade flat or down even though the fundamentals remain solid. Next up is AVPT. This is AVPoint. They were previously a SPAC under ticker symbol APXT. They are a data management company that is specifically focused on the Microsoft Cloud. Despite the recent pullback, Chris Zane reiterated his $20 price target on AVPT. Now that AVPT is no longer a SPAC, it no longer has a $10 floor. This stock is heavily shorted, and I would not be surprised to see short sellers push AVPT well below $10. Technically, the chart is very bearish with the candles dropping, the RSI dropping, and the MACD dropping. The MACD even formed a death cross today. I would wait for AVPT to bottom out before buying in. Next up is CCIV. This is a SPAC and they're merging with Lucid Motors. Lucid Motors is an American EV manufacturer. CCIV has set July 22nd as the official shareholder vote date for the merger with Lucid Motors. Once the vote is approved, the merger should happen the next day. Chris Zane now likes CCIV but prefers it under $24. Right now, CCIV is maintaining this upward trend line, so I'm not sure if it's going to drop down that low, but it might. For now, I will reiterate my buy-in price of $28 and my ideal buy-in price of $26. Next up is CRWD. This is CrowdStrike, and this is a cybersecurity company used by banks and other large companies to help cybersecurity professionals manage threats. This stock was starting to look pretty bearish on the technicals, but was up today on news of a massive ransomware attack originating out of Russia. All cybersecurity stocks were up today on that news, with CRWD leading the pack. CRWD is now a little bit overbought, so we'll have to see if it can maintain this upward momentum on Wednesday or if it pulls back. If it does pull back, that could be a great buy-in opportunity. I will give you an ideal buy-in price of $230. Next up is DPW, and this is Alt Global Holdings. Their holders including military and commercial supplier of power equipment, including EV charging stations, a Bitcoin and Ethereum miner, and a financial services firm. This is my stock pick for today. DPW has really struggled over the past few months, but something special happened last quarter that I wanted to share with you. If we look at their annual returns over the past 4 years, you can see their losses shrinking every year. From negative $700 per share back in 2017 to negative $446 per share, all the way down to negative $21 per share in 2019, and then just negative $3 per share in 2020. Now let's take a look at the past 4 quarters and specifically look at last quarter. Earnings per share was positive last quarter for the first time. That is huge news. If DPW maintains this 5 cents per share in earnings, that would give them a PE ratio of only 13, which means DPW is cheap right now. But before we get too excited, let's take a look at their debt. As of last quarter, DPW had $107 million in cash, only $790,000 in long-term debt, and 0 short-term debt. That's amazing. This company has over $100 million in cash and no debt. And they just turned profitable. Okay, one last thing to check before we jump all in on DPW. Let's take a look at their share offerings and make sure that their cash on hand was not due to a large share offering. And it looks like last quarter, DPW issued $125 million worth of shares. Well, there it is. That explains the large amount of cash on hand. Now, DPW said in their earnings call that they are going to use the cash on hand to shore up their balance sheet and help grow revenues. And it certainly looks like they did just that, with revenues last quarter growing 136% year over year. So altogether, DPW is a growth stock that has performed very well over the past few quarters. They struggled for years, but it looks like they have finally turned this company around. DPW will probably have to show consistent profitability over the next few quarters in order for investors to get back on board. But it does look like this is a huge opportunity for tremendous gains if you don't mind a little bit of risk and are willing to hold DPW long term. Next up are FB and GOOG. These are Facebook and Google. Jeremy with Financial Education said he thinks FB and GOOG are going to struggle for the remainder of this year. His reason is because FB and GOOG saw record revenues last year when everybody was stuck at home and spending all of their time on Facebook and YouTube. But now that people are going back to work, he thinks that the time spent on these platforms will go down, which will in turn cause FB and GOOG to see lower revenues. Both FB and GOOG are rising going into their earnings later this month, but Jeremy with Financial Education does not think FB and GOOG will continue to beat earnings. He thinks earnings are going to become more normalized. This could send their stock prices falling, just like we saw with Walgreens, ticker symbol WBA. Next up is NFLX. This is Netflix. Jeremy with Financial Education thinks NFLX is going to have trouble with their subscriber rates going forward. He thinks that everybody signed up for Netflix last year when they were at home, and that NFLX is going to have trouble adding significant numbers of new subscribers. If that turns out to be true, then we will most likely see the exact same thing that we saw last time NFLX reported earnings, where the stock dropped 7% the day after they reported earnings. Next up is PLTR. This is Palantir, and they're a data analytics company. Tom Nash gave his reasons why he thinks PLTR should be a $1 trillion company. He used a 10-year discounted cash flow model to come up with his valuation. The reason he went 10 years is because most of Palantir's value is in the future. Tom Nash's valuation would give Palantir a price range of $44 to $165. The current price is only $24.68. So whether you go with the bear case or the bull case scenario, either way, PLTR is undervalued right now according to Tom Nash. If you want to see the details on how Tom Nash came up with his valuation, you can go watch Tom Nash's video that he uploaded Tuesday. Next up is SBUX. This is SBUX. Paul and Guma likes SBUX for a short-term technical trade. If I turn off the EMAs, you can see how SBUX broke out above this descending triangle pattern a few days ago. This is usually a sign that a stock will continue higher. SBUX may continue going higher leading into earnings at the end of this month. And the weekly chart looks even better with confirmation on the MACD and RSI. Paul and Guma thinks SBUX will get to between $120 and $122 by the end of this week, and there are signs that it will continue going higher for the next 2 weeks also. Paul and Guma did warn that SBUX might drop on Wednesday and Thursday before going higher again though. And last we have SOFI. This is SOFI, and they're an online fintech startup. Chris Sane likes SOFI in the $14 to $17 range. Yesterday I gave you a buy-in price of $17.50 and an ideal buy-in price of $16.75. I don't think SOFI will drop all the way down to $14. In fact, I'm going to give you a stop-loss price of $14 just in case it does drop that low. Alright, I hope you enjoyed this video and got a lot out of it. Comment down below what your favorite stock pick is. And if you're looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $5, Webull's going to send you 2 free stocks worth up to $2,300. Now, if you're not a US resident or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is a highly discounted trading platform with commissions starting at just $1 Canadian, 4 euros or 6 Australian dollars depending upon where you live. Both Webull and Interactive Brokers offer the full pre-market and after-hours trading from 4 a.m. until 9 p.m. Eastern Time. And I do have material connections with both Webull and Interactive Brokers, so when you use my link to sign up, not only are you getting access to a great broker, you're also helping me to be able to continue producing these great videos for you. Now finally, don't forget to hit that like button, subscribe, and click the bell icon, or follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.